Hi, welcome back to the channel. Today we're going to be looking at the earnings for AMC and Salesforce. AMC is one of those stocks that made the year 2021. You know, the Reddit guys, the guys that were hungry with the Wall Street, they did a lot of stuff that the stocks went up and down, AMC and GameStop, but AMC is not the kind of stock that we promote. We invest in Elite Pro. I don't have it in my own portfolio, and we don't have it in any of our funds. AMC, we can't get true valuation for AMC. It's just one of those stocks that not for us at Elite Pro. Salesforce, on the other hand, is one of those stocks. I had Salesforce in my portfolio back then. I sold it. I wanted to get it some few weeks ago when the market was in deep correction, but I actually wasn't able to get it. Then it was below its intrinsic value, and I like to get stocks when they are actually below their intrinsic value, but I couldn't get it. But it's one of those stocks that I actually like to add to my own portfolio. We have it in our funds, in several Elite Pro funds, but my own portfolio, I don't have it at present. They declared their earnings and they beat top bottom. Wonderful. Salesforce revenue was 7.33 billion. The estimate was 7.23 billion. The EPS is 0.84, while the estimate was 0.83. Not big significant, but investors are happy with it because the stock has, jumped in price for about 4%, which is very good, But then AMC, on the other hand, AMC missed just a little bit, but then their revenue is 1.17 billion versus the estimate is 1.14 billion. The EPS is where they actually missed. The EPS is 0.11. The estimate was 0.16. So it's a near miss. However, what you need to know about AMC is now that AMC will now be doing dynamic pricing, which means that the movie you watch at this cinema, you could watch it there and it could be more expensive or even cheaper. It's dynamic pricing. Also, AMC is still one of the heavily shorted stock on Wall Street. It's very volatile. They have liquidity. They have more than 1.6 billion in cash flow at the moment. So, but be careful with AMC. Let's have a look at their financials. We will have a look at their balance sheet, cash flow, and their total liability. Then we will have a look at them on the chart for price action. Let's have a look. So, guys, we are looking at the earnings for. This is actual earning details for AMC, Q4, which was ending of 2021, but we're in March 2022 now. This is the earnings. The EPS. The estimate was 0.19, but the reported was 0.11, which it was better than the estimate. The most important thing here is this is the yearly forecast, but what you need to actually see here is the for this year 2022. You can see these are the forecasts, up to 2023. Then the changes in consensus, number of estimates change and all that. But for me, the most important thing that I want to show you here, I want us to check the financials. Under the financials, this is the total revenue. I want us to see how they're progressing, how they're making money, revenue and cost of revenue. Also the liabilities. 2018, you can see it's slightly above 5.4 billion, 5.4 billion. 2019 as well. 2020, there was lockdown and everything was down. So here is 1.2 billion. 2021 reopening, moving back to normalcy. People are going back to the cinema. You can see all that. This is 2.5 billion. So, which means like they've done double of what they did during the lockdown. So see the gross profit has also risen as well. But here I want us to look to pay attention at the liability total. Let us have a look at the sorry about that. Yes, sorry, the balance sheet. The balance sheet. I want us to see the total liability, the total the entire debt that they're owing. To now compare it to their cash flow. This is their total liability. Total liability is slightly about 12.6 billion in their total liability. You can have your in your own time. You can look at the all the breakdown of it, the information, but let's have a look at the cash flow. I want us to see the total free cash flow. Here it's reported as net free cash flow. This is the amount that they can use to do anything, absolutely anything. This is about 1.3 billion. So meaning that it would take them above 12 years. This their liability is actually high compared to their cash flow. You know, let's have a look at Salesforce. Salesforce also declared their earnings, and they they beat top bottom, even though yeah, Salesforce Q1 2022. This is where we have the estimate was 0.12. The reported is 0.24. So they beat their earnings. You can also drill down to see the earnings surprise. The surprise was 100%. You see, this was the forecast. The forecast was 0.12, and they did 0.24, so double. So that was 100%. Then the quarterly forecast, you can have a look at that. The consensus changes, number of estimates. My goal, my intention here is the financial details. I want us to see their free cash flow, their balance sheet. But look at the revenue, 2018, 10.5 billion, 13.2 billion, 17. It shows that it's a growing company, and you know their revenue is increasing. That's what it means. Year in, year out, it's increasing. Let's have a look at the balance sheet. Look at the balance sheet. Under the balance sheet, I want to see the total liability, the total amount that their liability. Total liability is under 24 billion. This is it. Total liability. You cannot say whether it's high or low. Let's see their free cash flow. Let's see what the amount they have in their total net cash flow. This is 2 billion compared to their, it seems that, I mean, don't get it wrong. Companies can hold debt. It's normal. Every company has some sort of, whether you have money or not, you have some sort of debt, but not to be excessive, to be within range. I would like a company to be able to pay their debt in not more than 5 years. This means that it will take more than that. Um, yeah, this is what it means for me. So really, I'm not really impressed, to be honest. But that doesn't mean that you cannot invest, or you cannot find a way to do your own valuation and see if it's worth investing. So, guys, we're looking at CRM. CRM is Salesforce, and as you can see on this chart, um, this is a weekly chart. So last week it was sitting on the 200-day moving average as support. This week, so far, we have been trending down. It has been bearish. Last week was when I wanted to get it when it was at around 183. I missed that opportunity. That was below its intrinsic value, but this was received as bullish reversal. However, this week on CRM, we've been bearish all through. I mean, this week, first week or in March, market has actually been trending down, one way or the other. So this is it on the weekly chart. Let's have a look at the daily chart. Let's see what the daily chart is saying. Okay, well, on the daily chart, it seems it's actually above the trending line here that sits as support. So
I recall that I actually did this analysis and said that if it was the time to get it stock was above this line, which actually it is at the moment, but because it has been bearish all through, I will still wait to see maybe it might just come down below here again. Otherwise, if we end this week and it's sitting here as resistance, I mean as support, then that's fine. Here we are trading just um, above 20-day moving average, 50-day moving average, but the stock was trending down until this bullish reversal. This was an anchor candle. I mean, uh, bullish engulfing that actually put this stock above this channel. So after that, it was sitting on it as a support. This is on a weekly chart for CRM. Let's have a look at AMC. I think AMC. Let's see what AMC is doing. AMC Entertainment. AMC has been a stock that I have never owned, and I will not because of the volatility and the fact that Reddit Reddit guys and the Wall Street has issues about it last year. I mean, the most important thing is that stock that you cannot really make good valuation out of. I mean, I can't put it on my own portfolio. So let me see. Here, we're trading below. Okay, we're trading just above 20-day moving average, below 50-day moving average, and it's sitting on 20-day moving average as support. This this line is very visible here. That is the support line. It's sitting there on a support line. This is on a daily chart, but you know, AMC was trending down. He has been trending down since September 2021 to date. It has been trending down, and here let's have a look at it on a weekly chart. On a weekly chart, now you can see why I said this is not the kind of stock that we want to have. See, it was here in 2021 that it spiked, and um, and ever since then it has been, trending down, coming down. Is anyone who trade Bitcoin will love stocks like this. I like stability and stocks that you can do proper valuation and you can look at it. It was actually dead for years for before the Reddit guys and this stocks and GameStop they did the same thing. It was the same time they started those Reddit Wall Street is it battle or whatever. Anyway, this is we are trading just slightly above 20-day moving 200-day moving average on a weekly chart for AMC. Guys, be careful with AMC.
We have seen the technical chart, we have seen the price action. Do your own valuation. I will find a time to get Salesforce, whenever it's below its intrinsic value. I will add it to my own portfolio. AMC, I have nothing to do with AMC, never will. But guys, that is my own opinion. So do your own valuation. Be sure that you're not getting this stock because you watch a TV, you watch a YouTube channel and they're talking about it. Make sure you have your own criteria of valuation. Thank you for watching this channel. Please like and subscribe and call again. Thank you.